A very good morning, guys. 2 days ago, the support cracked. Tuesday, on expiry, Nifty lost 24,000 and Sensex broke 76,200. And I sat here and told you the broken floor, the support was now the resistance, and sell the rallies. And then Wednesday happened. And the market did one thing I said would flip it. It reclaimed the level and held it. Nifty closed at 24,021, Sensex closed at 76,991. But here's the part nobody on your feed is telling you right now. While the price was climbing back through 24,000, the option writers were quietly rebuilding the exact support they lost on Tuesday. The data shows you who actually believes this bounce. Today's Sensex expiry. Let me show you how the tape has built the chart. This is the Tanmay Edge. You are listening to episode 68. I am Tanmay Gurdoti. Let's go. So starting with the close, because the close tells you the story. Nifty at 24,021 up 197 points plus 0.38%. It opened gap down at 23,795 below Tuesday's close and exactly the support level which we told yesterday. Dropped to 23,789 and then spent the entire session climbing. It closed near the day high. That is not a nervous bounce. That is a session that found a buyer at 23,800 and never looked back into it. Sensex did the same thing. 76,991 closing, up 790 points plus 1.04%. It reclaimed almost everything it gave back on Tuesday. 30 of the Nifty 50 stocks closed in green. IT led the rebound. The same sector that got routed on Tuesday's Korea chip rout was the one that pulled us back. And this is the whole game. Who did the buying? Because it was not FIIs. So here are the official numbers. So on Wednesday, the FIIs sold almost 1,843 crores while DIs bought 3,637 crores. So the rebound that claimed 24,000 was a domestic rescue. The locals bought the dip. The FIIs were handing them. That is the second day in a row that DI desk has carried the market on its way back. And the FIIs didn't just sell cash. Look at the futures value, guys. The FIIs net short index futures went from 228,561 contracts on Tuesday to 229,053 on Wednesday. They added to the short into a 1% rally. They deepened the hedge, and that is where we are not looking in. That is the stock futures. They have built a huge stock position underlying that hedge. That is the desk that is not convinced. That is the desk that is protecting its long stock book and refusing to chase it. Now hold that thought, because the next number is the one that changed my mind about that bounce. On Tuesday, when 24,000 cracked, the 30th June Nifty chain had a put-call ratio of 0.78. Call heavy. That is extremely bearish. The biggest open interest sat on the call side at 24,000. The broken support had become a resistance of overhead supply. That's what I built Tuesday's call on. By Wednesday's close, the same 30th June chain yesterday had a PCR of 1.21. It had flipped completely. The single biggest open interest position in the entire chain is now the 24,000 put, not the strike. 1.21 crore contracts of open interest sitting there as the support, and the built up tells you it happened in one day. Put writers added 44 lakh contracts and 23,900 another 29 lakh contracts. So all stacked deep tail puts till 22,500 and 22,000 as well. So Max Payne pulled right back to 24,000 strike. That was the expectation where the market should close back and the magnet or the pinning should happen. And here is the lesson, and write this one down. When a level breaks, then gets reclaimed, the price chart will tell you the what, but the option writers tell you whether it's real or not. A put writer is someone selling insurance. They only sell a 24,000 put if they are willing to buy the index at 24,000. when the PCR flips from 0.78 to 1.21 in a single session and the open interest piles up under the reclaim level, that is not a retail noise. That is the smart money voting that the floor or the support is real. A reclaim that the writers refuse to fund it is a trap. A reclaim that writers rebuild under, that's the support. Wednesday, they built it. So the pros agree as well. By the way, in the participant data, the pro segment flipped from net short on Tuesday to a net long of 8,500 contracts in the index futures on Wednesday. The clients are still long, the DIs are long, only the FIIs are still short, and that's the tension that walks us into today. So now let's get back to today's expiry, Sensex weekly expiry, and the gift Nifty is pointing to a gap up of around 24,100 plus 83 points, which means Sensex opens this morning somewhere near 77,200 to 77,300, and that is the problem because that opens us straight into the resistance. Here are the Sensex levels for expiry today. Overhead, the call writers are stacked at 77,000, then 77,500, then a heavy resistance at 78,000. That's 77,000 to 77,500 band is the immediate battle, and a gap up open lands us right inside it. It is 0 DT. Underneath, the put support sits at 76,500 and then 76,000. Then the real floor is much below. Max pain is sitting around that 76,700 to 76,500 mark. So read the geometry. We are gapping up into a call wall, that is a resistance. On a day those calls are going to expire. India VIX has cooled back towards 13 from Tuesday's 14 level, so the volatility is bleeding out, and that matters because on a 0 DT, falling volatility plus a price pin near the writer's strike means theta and gamma do the work, not the direction. The 1ST expected move on Sensex today is about 520 points. Call it. So 76,470 to 77,510. That is the range I am playing for today. That's a tight box. The expiry wants to pin, not trend. Remember that, guys. The gamma confirms it. With heavy open interest stacked both above at 77,000 and below at 76,500, the dealers are long gamma inside that range, which means every push gets sold back towards the middle. The amplified runaway move only comes if we break a clean above 77,500 or a clean below that 76,500 mark. Inside that box, expect a choppy session today and a pinning happening towards that 77,000 range. Outside it, expect speed and a rally once again. One more layer, guys, because today is a 2-day event and our market closes. So tomorrow we have a holiday. So tomorrow the markets are closed. Yesterday the United States released its core PCE, the Fed's favorite inflation number, plus durable goods and the final first quarter GDP. A hot PCE keeps the hawkish Fed exactly where it is, and you have been seen what that already has done it. Gold has cracked below 4,010 mark to a 7-month low. Silver fell almost 5%. Crude dropped over 4% to around $70. Even Bitcoin is at 2-week low. A strong dollar is vacuuming money out of everything at once. For us, that crude crack is a silver lining because $70 oil is a gift to an importer like India. It eases the import bill and the inflation math. But the rupee is still soft at 94.86, that is below that $95 mark on dollar strength. So the setup is a friendly crude tailwind, a hostile dollar headwind, and a US inflation print tonight that nobody wants to be caught naked in front of. So here's how I am reading the day for today. Above 77,000 and holding, the reclaim extends momentum towards that 77,300 and 77,500 mark, and that's where the call writers will defend. Losing 76,500, the gap was a relief rally and we fade back towards that 76,000 mark. Inside 76,500, to 76,700 and upwards towards 77,000 is an expiry pin. So expect the expiry to happen towards that 77,000 mark, and a 0-day expiry, you respect the pin. You do not carry a naked position into a falling volatility. With a US inflation print waiting on the other side to be given out today. So the floor that cracked on Tuesday got reclaimed on Wednesday, and the writers rebuilt it underneath again. Today the question is simple: does the gap up confirm the reclaim, or does it run out of room at the resistance? Watch 77,000, the whole day lives there. That's the tape behind the chart you just got earlier, guys. And if you like this podcast, give it a rating. I am waiting for your reviews as well, and listen it live and first on rupeecase.com, where it streams first, and also on Apple and Spotify as well. And don't miss to subscribe the podcast, because you won't miss a single session on every trading day. This was Tanmay signing off. See you all once again after a long weekend on Monday.